Sumina, did I catch you in a Lone People shirt? I love it.
I almost wore one, Max. Almost.
Okay, awesome. Well, welcome everybody. Thank you for jumping in here. Like I said, we really want this to be a very informal conversation. Now, obviously, the conversation is going to be a bit three-way between Max, Eric, and myself. But all throughout this conversation, we really want to encourage you, as you're listening, as you have questions that come up, please go ahead and drop those questions into the chat. As the guys lean in and share their expertise, I'm going to be eyeballing the chat. And as questions come up, if we can interject them into the conversation as we go, we'll definitely do that. So definitely lean in and bring your questions into the chat. We will try to save some time at the very end of the conversation to see if anybody just wants to do a traditional Q&A. But typically I find that as we're having conversations, it's easier to lean in as we're having the conversation. And that also helps to keep all of us engaged, right? So feel free to do that. So those of you that just jumped in, let us know inside the chat, where are you coming from? We want to know, who's in the room, where you're coming from. And let's just kind of start off the conversation by doing some quick intros. I guess I'll start off. My name is Stacy Soleil. Eric, thank you for inviting me to jump in as moderator. I feel very honored to be able to do that. These are two extremely bright individuals in our industry, and I always love when I get a chance to, engage a conversation with people I think get it. Right? A little bit about my background, my titles, who cares about titles, but if you need to know, I run community. I'm head of community and industry relations at Follow Up Boss. I don't know if any of you are Follow Up Boss users, but if you are, hello. You might know me already. I also am a contributing writer to Inman News. So I do like to stay on top of the pulse of what's happening inside of our industry and just stay connected to the people that really understand what it's like as we go through turns and shifts. And that's why I was very excited when Eric said, hey, we're going to have this conversation. Max and I have been having this conversation for 10 years now? Let's take this conversation and share it. So Eric and Max, would you introduce yourself? I'm sure everybody knows you already, but just in case on the rebroadcast, people are like, who are these cool guys? Eric, jump in, share with us who you are and your background, etc.
Yeah, absolutely. So I'm Eric Bramlett. I'm the broker owner of Bramlett Residential. I think I know most of the people in the room here. I have been in Austin real estate since 2003. I always joke that I got serious about it in 2010. And yeah, I was a producer. Now I manage the brokerage.
Awesome. Max, how about you?
Max Leaman. I got in the business July 9th, 2001 was my first day. Been 22 years, grew my team, Leaman team, through a couple of different companies. And, we're #1 in Texas and top 10 in the nation since around 2010, 2012, somewhere around there. In end of 2018, I decided I kind of had enough of these big companies and the way they did things. And we decided to open our own. We spent all of 2019 setting it up and opened our doors as Lone People January 2020. It's been a ride.
Wow, that sounds like that's been quite the ride, actually.
It's been exciting. The pendulum has swung far both ways.
Highs and lows, man. Highs and lows.
Yeah, I was a genius in 20 and 21. In the last 6 months, you kind of wonder, are you still a genius?
But you know what? The three of us were having a conversation before we jumped in here, and we were talking about the reality is that there are always these changes, and it's easy when you're having an amazing market to feel like, you can pound your chest and like, I am so amazing. And Eric, I think you were the one that kind of stepped in with that humility statement of like, yeah, no offense to those of you that, have worked really hard and you're really proud of yourself, but let's be honest here. Let's talk about what really happened, right?
Yeah. So it's a concept of addressable market and the market size. So between 2020 and end of 2022, the market, it increased by, call it 50% during that time. And that's the amount of volume that's sold. I don't have that exact number in front of me, but it's roundabout there. So if your production numbers went up during that time, congrats, that's awesome. I'm glad they did. but you had the wind at your back and you were walking downhill while you were doing it. Flip side, if your numbers are not as awesome this year, that's also because the addressable market has shrunk pretty considerably. Stacey, do you want me to show the charts that I brought up earlier, or do you want to do that a little bit later? You're muted.
Are you able to hear me okay?
Now I can, yeah.
Okay. Let's kind of set the stage here really quick, because
Sure.
for some of the folks that are on this call, there might be plenty that were around during the market, during 2008. And there might be some that entered the market after that. And there might be some that maybe just got in the market. So I just want to kind of set the stage really quick, just assuming nothing here. So if any of you that are listening in today, if you were around during the global financial crisis of 2008, you're going to probably remember that there was that very sharp decline in overall economic activity. And it was modest at first, but it steepened sharply. And then in the fall of 2008, as the stresses in financial markets reached their climax, from peak to trough, the US GDP, which is the gross domestic product, fell by 4.3%. And that made that time period now the deepest recession that we had experienced in this country since World War II. Now that's pretty significant, right? And for those of you that maybe were, you're post that era, not realizing that there's folks inside the industry that you work with in your offices day to day that had weathered that storm and had some, serious side effects as a result. And I think that this is an opportunity for us to lean in and have a very honest conversation about, hey, what was that like? And what did we do wrong? Yes, I think we should talk about what we did wrong, because we can learn from our mistakes. And also, what did we do right, so that we can push forward and say, hey, we're experiencing things that are a little bit uncomfortable. How do we weather this together? So just wanted to kind of set the stage with that. So now that we've kind of leaned into that, out of curiosity, those of you that are here in the webinar right now, drop in the chat, were you in the business during the 2008 recession? I'm just curious to see, who do we have that's was there, had some stuff to share, because we're going to want to lean in and hear some of your thoughts as well. And if you haven't, we want to know as well. And there's no shame in the game. This is all about how we can share and lean in together. So Eric, now that we've kind of set that stage, it looks like we have a pretty even mix. If you look in the chat, we've got about 50-50 as far as, people that have experienced this. And it's starting to lean more into the no, a lot more no's than yeses. So Eric, you had built out a graph that kind of gives some perspective. I would love for you to kind of share that with
Yeah, it's sort of like, let me pull it up real quickly and then I'll share my screen. It's very much just an illustrative graph. Like, these are fake numbers, but let me just show what happened and what my experience was. Whenever the addressable market is bigger, right? So let's assume that there's an addressable market of 100 million and there's an agent that has 10% of that addressable market. You're working, whatever it is you do, you're able to take 10 out of 100 deals or whatnot. And you did 10 million that year. Well, we've seen the addressable market shrink by 35%. It's actually 36% year to date, meaning the volume of real estate is being sold. The total commissions that are out there are much smaller. It's actually around 65%. So if you maintain your market share, you're going to do 6.5 million in the new, smaller market. What I did in 2008 was I had bills and I didn't have a lot of savings. And I was like, oh my gosh, if I don't make the same amount of money that I always have, I'm not going to be able to pay my mortgage. And I had to outwork it. And it wasn't, something that I planned or whatnot, but I was like, oh, I have to make the same amount of money. So if you make the same amount of money, your market share has to go way up. And so the same agent has to have 15% market share in order to make the same amount of money. Now that stinks, because now you're working 1.5 times as hard, sometimes twice as hard, to get the same paycheck that you did whenever times were easy. Here's the light at the end of the tunnel. Here's the pot of gold at the end of the rainbow. Whenever the market comes back and it goes back to 100 million, your money's going to go up by 54%. So you're all of a sudden, if you maintain that same market share, 15%, now you made 15 million. And that's what I experienced very accidentally. I wasn't a high producer in 2008. 2011, Keenan Beck, who's on the call, I remember I was at a Movember party, and it was the end of the year, and I was like, man, how are things going? And he's like, man, they're really good. And I said, me too. And just in hindsight, rear view, like, this is a really amazing year. And then 2012 was the best year I'd ever had. I did 10 million that year, and then won the ABJ from 2013 to 2018, and we stopped submitting in 2019. And that really just, like, I had to create all these habits and change my own behavior in order to outwork the recession. But then it really supercharged my career in business after the fact, because I gained all these efficiencies and worked so hard.
Yeah, it's interesting because as I was listening, you shared that with that chart you made before we jumped on the conversation. And isn't it interesting, those of you that are listening, how it's pretty logical, right? It seems pretty logical that, oh, okay, that makes sense. You have to adjust according to what you're up against. But isn't it interesting how so many of us kind of forget that it is that logical, right? We're always looking for what's a trick, what's a tactic, what's something that, I can snap my fingers and now this problem is no longer a problem for me anymore. And the reality is that, if something sounds too good to be true, we all know that it's too good to be true, right? So that's why I really appreciate this conversation. Max, out of curiosity, you being in the seat that you're in, you probably have some pretty strong predictive analysis behind what we're moving into. I'm curious, let's kind of start the conversation there. What are your predictions as we're kind of leaning into this downturn? What are your predictions? No pressure. But,
no, it's and some of my predictions have been wrong. I gave out some predictions at the end of last year, and rates aren't, I was thinking that rates would probably be mid fives by end of Q1 into Q2. Obviously that hasn't happened for a couple of reasons. I know a lot of y'all on this call and a lot of loan officers are very eagerly waiting for May 10th, Wednesday, for the CPI report. For those of y'all that follow Barry Habib, he's the one that's had this date circled for months now. And, I think he's probably a little bit more optimistic than I am, just seeing what's been happening and what's going on. I think, a lot of people seem to believe that you're going to see rates really in the mid fives in the next 30 days. I think it's probably more sometime between July and September timeframe. I think that rates will continue to come down. We've definitely seemed to have stabilized, although there is still a lot of volatility. And, for those of y'all that know me, y'all know I like to look at Mortgage News Daily to just track the average rate. And it's been 6.75, 6.5, 6.3. I mean, it's been bouncing around a lot, but rates are kind of stuck about that 6.5 average rate. And I do think that we're going to continue to see them go down. I don't think it's going to be a very steep decline. I think it's going to be gradual. I do think the second half of this year is going to be better than the first half of this year. Obviously, when the bar starts at zero, you don't have, it's easy to be better. But, we've seen a definite uptick in applications over the last several weeks. We've definitely seen an uptick in contracts and locks. On the loan side, we always refer to locks. When you lock in an interest rate, that's what our goals are. So how many locks did you get this week? That kind of thing is big in our world. We've definitely seen that come back, to the point where even if I use Lehman team as a measure and loan people as a measure, both have had 2 of the last 3 weeks have been the best lock weeks we've had in 6-7 months, maybe longer. And this past week,
out of curiosity, I'm just, as you're talking about these locks, I'm really curious. What do you think is making it so that people are saying, yes, I'm ready to lock in here? What about right now? Is it's like, I don't think it's going to change. It's hype. I need to focus on what I need to do right now. Like, what do you think is causing people to lock in right now?
I think it's a lot of things, but I think just the fact that rates are stabilizing and the market buyers understand where rates are. It is no longer a sticker shock. Last year we started the year at 3%, and then we went to 4, 5, 6, 7. It peaked at 7.37. So anytime a buyer started starting the process, rates jumped another point, and it was really discouraging. Plus inventories, it was a lot of things, and the market's definitely stabilizing, and buyers are getting used to this new normal.
I do think, I mean, I completely agree with you. The second half of last year was pretty awful. I think in hindsight, we'll look at it and say, okay, that was the trough, probably second half of last year into February. And looking at it, more than likely Feb 23 is probably where the pricing trough is or was for Austin. But I do disagree with you a little bit that the second half of this year is going to be great or much better than the first half. And the reason why is that mortgage rates have stabilized. But if we do see rates go down a little bit, we will see some more demand in the market. People can just afford to buy more. But in Austin, what we've had as a constant since the great financial crisis is strong job growth. And we don't have that right now. And it is one of the last leading indicators to get worse. And I'm tracking the Indeed data for the Austin Metro, and it's not trending in the right direction. So in March, we saw a 22% year-over-year decline in the number of Indeed postings. And in April, we saw almost 30% decline. It doesn't mean that things are going to be terrible. It doesn't mean that things are going to be awful. But you know, if you've worked in Austin real estate for more than a couple of years, or even for a couple of years, a big component of that, it's relocations. And you know, anecdotally, people just aren't moving here like they have in the past because the jobs, we're not hiring. So that will come back. That's not gone forever. There's not a chance in heck people stop moving to Austin. But we have to see a broader economic recovery. We have to see these tech companies start hiring again for us to get back to our normal, really awesome market that we're also used to. By the way, I don't mean a normal 2021. I mean to get back to 2019, which was, by the way, I strongly prefer 2019 to 2021. Much more comfortable to work in that environment than in an absolutely insane waive all contingencies, offer 20% over list environment. I didn't like that very much.
I tell everybody I'd give up 20 and 21 right now for 5 2018s.
Absolutely, all day long.
So yeah, we'll see how it plays out. You know, you're a numbers guy, and super logical and analytical. You know, we'll see how it plays out. I look forward to one of us saying, "I told you so."
Okay, we have some really great questions that have been popping in the chat. Thank you, those of you that are doing that. Let's continue to bring those questions into the chat so that way we can answer them as we're at the conversation point. Okay, so a couple of things. Amanda Patterson brought up a great question here. How much of the improvement that we're experiencing is due to the cyclical nature of our market? Who wants to take that one?
I'll take that one because I talk about seasonality all day long. We have I'll send everybody a handy dandy chart that we present to every seller. And yeah, throughout my career, I've watched agents, the broader chatter say, oh my gosh, the market's absolutely on fire and it's insane in March. And then August rolls around and everybody's like, oh my God, the market's collapsing. And it's because of seasonality, and seasonality hasn't changed. The only time I've seen seasonality change was whenever we had a pandemic. That changed buyer behavior at that point in time. But there's a reason why people buy in the spring and summer and they don't buy as much in the fall, winter. And that's because of the school calendar and it's because of holidays. And I don't see that changing. That said, you know, we're looking a lot at month over month data right now, pricing data, to see are things still declining? Because if you look at year over year, yeah, it doesn't look awesome. So we want to see your prices still trending down. However, whenever we get into the fall, winter, we will look at year over year data again, because we want to see are things better this time, you know, versus the trough of Q3, Q4, 2022. Sorry to get off on kind of a tangent, but I do think a good component of it is seasonality. But I do think second half of this year will be a lot better than second half of last year.
Yeah, that's a good point. And that's something that's really good for all of us to remember, because I think when we all hit that wall of the pandemic, our minds just said, okay, everything's different. From this point on, everything in our life is different. And we're realizing now that that was then. And there are still things, like you said, seasonality is back on track, as far as there are some things that are out of our hands. But like you said, a lot of things we're seeing are seasonality. Let's see here. Catherine Blanco shared, how do we think, if at all, the migration to remote roles, particularly in tech, make an impact on what we're seeing inside of Austin? You want to take that one, Eric? Because you were saying, I believe it was you that said,
yeah,
you know, until we start seeing the tech companies hiring, we're not going to see that same momentum that we once had.
Yeah, I mean, I follow a lot of chatter on Reddit, on different apps. I think we hit and have already hit, and we're getting past peak work from home. These companies are bringing people back in. They're saying, hey guys, the employers have leverage now because we're not in this absolutely insane job market. And, unfortunately, and I know this from experience, most people are more productive whenever they come in the office. They just are. You do meet some random people, and FUB's a wonderful example. You're probably the biggest company I know, 150 employees or so, 100% remote. I do know that you guys take every opportunity you can to get people in a real room together because you're just more productive whenever you're together. So Catherine, I do think that you're going to see tech dial it back in a little bit. So if anything, we might see an uptick of more people moving to Austin from the Bay Area again, because they want them in a hybrid. I think it'll be a hybrid work environment. But I do think that'll actually kind of swing a little bit more in our favor after it's already swung way away. No, I guess it didn't swing way away from our favor. We swung to sort of peak work from home, and I think we're going to swing back a bit.
Yeah. Max, do you have any thoughts about that?
I agree. For the most part, I do agree with Eric. I think that people being in the office is better. People are more productive. I like for the sales guys to be in the office here. You get that synergy, collaboration. Like it makes it's a better team environment. It's just all the way around. I know a lot of people don't like it. And, I will say I have had some people that went home during the pandemic that were definitely more productive at home than in the office. So, I think some of it depends on the role and what you're doing.
You let those folks work from home, by the way. Whenever you discover that, you're like,
oh yeah, 100%.
Katie, for example, my favorite processor at Loan People, give her a raise. She, I know she works 100% from home, and I don't know why in the world you'd ask her to come in because she does such a great job. So.
Right, exactly.
Yeah. Well, what's interesting about that is, obviously I work on the tech side of things, and, I have a lot of friends and colleagues that are in the tech space. So I do think that there is a lot of, like you said, depending on the position. There are some people that do actually, that get a lot more done, and they tend to sort of self-slave, if you will, and that's a horrible expression. But when you work from home, you tend to, work ridiculous hours, right? I mean, how many of you, I remember when I used to go into an office, it was, show up at 8, be done at 5, and pretty much that was it. I'm done. I left the office. But then when I shifted during the pandemic and I'm in-house, well, all of a sudden the lines were so completely blurred. And next thing you know, I might have started at 9, which was kind of cool, right? Maybe not starting as early, but it's 9 o'clock at night and I find myself still on the computer working. So now I've given more time to my business. So there are some sections that are realizing we are getting people to work for more with the same pay, right? So I think there is like that kind of depending on the role. Now, if we're specific to our industry, obviously we do see that we need human interaction. We need people to bounce ideas off of. We get stronger together. But if we're talking about tech in general, it's going to be interesting to see how that plays out, because I know more and more people, as they're looking for jobs in tech, they're looking for the ones that say remote. We have a different generation that's in the workforce.
I will say, sorry, the anecdotal chatter is that the jobs aren't out there for remote, that a lot of these guys are pulling them back in. And again, you guys are, I think Zapier is the only other tech company that's as big as you guys that's fully remote. But to go back to it as it applies to real estate, I think that applies a lot more to the commercial office market than it does to residential. And if you read about, the Bay Area and what's happened to their office market, it's been pretty much decimated. But in terms of like what we generally work in here, which is residential, I think we're totally fine. Sorry to cut you off. I just want to interject. I've seen a lot of dissatisfied chatter about people looking for jobs, trying to find remote in the tech space, and they're not finding it really. So.
Yeah, it'll be very interesting. I think this is one to very closely monitor because it does affect both sides, right? It truly does. And we're seeing folks in the chat saying, hey, like Lily's saying, I work from home and it's like 9 a.m. to 7 p.m. Monday through Saturday, which is probably, Lily, I'm guessing more than you would have worked if you were in the office Monday through Friday. Okay, Henry has a really great question I'd like to share in here as well while we're on this topic. How do both Eric and Max, both of you, how do you feel about the potential looming bank failures, certain countries depegging from the dollar, and how will this affect the real estate market? That's a big ask, a big question, but what do both of you think about that?
Well, I'll start here. You know, what we've seen with some of these bank failures, just on the lending side in general, you're seeing really a tightening of guides to a certain degree. Jumbo loans. There's been a lot of investors that had money at these institutions or were backed by these institutions. There's also other institutions y'all haven't heard about that us in the industry have heard that there's problems with as well. So, you know, there is a concern as to product availability still being there. And I'm not talking about your regular Fannie Freddie type loans, normal conventional loans. I'm talking about all what we call the non-QM stuff, jumbo loans, bank statement loans, asset depletion loans, DSCR. There's a lot of different things that we rely on these institutions for, and so I think that's a concern. I mean, as far as depegging the U.S. dollar and how it will affect the real estate market, my initial reaction to that is you probably don't have as many overseas buyers coming in using real estate as a safe haven. I don't know how much that would necessarily affect local stateside buyers. I think the bigger concern would be the international buyers, you know. So, Eric, what are your thoughts?
Yeah, I mean, it's all, if we have bank failures, it's not going to be to the extent that we had them in 2008. I mean, 2008. What's interesting, I always recommend that people watch The Big Short and understand that nothing was exaggerated in that movie. I mean, nothing. Like the first house I ever sold was to a bartender friend that had $0 in you know, provable income. And so we had all these toxic assets that had to be washed through the system. These smaller banks, and Jen asked a question about, you know, the risk that they're carrying. And Max, I don't know the answer to that. If the big banks have the same duration risk that the smaller regional banks have, I don't know that it matters a whole lot. And I'd like to hear your opinion on that, because if we're looking at Fannie Freddie loans, it's still going to be sold up, correct? So I don't know that we ever see a big bank fail. Anyways, the government has proven that they won't really allow, you know, one of the big four to fail, I don't think. But the smaller bank failing, I don't think it really affects us, other than those niche products that you just mentioned.
Yeah, the big four are just going to get bigger. I mean, they're just going to keep gobbling up all this stuff. They are too big to fail. We've already seen that. The government's already said it. You know, I think that when the government stepped in and basically said they were going to backstop everybody's deposits if there was a run on the bank, frankly, they didn't have a choice. They had to do that. It would have been a disaster if they didn't. But go ahead.
I didn't watch the First Republic crisis, quote unquote, as closely as I watched SVB, frankly, because I wasn't in the car for 12 hours like I was for SVB. But
right.
That, I mean, they effectively just backstop all the depositors there as well, right? No
depositors have lost their money. You know, and it's a longer conversation for another time with regulation and guidelines and how they have to report things on their balance sheet and all of that. Jackie, I can see Jackie Goods asking about the recent rumor changes to FHA loans. And she's asking, what are the rumors that recent change to FHA loans are going to cost conventional jumbo buyers more? There's a couple of things. One of the rumors going around right now is that FHA is now offering a 40-year loan. That is not true. It is based on a modification only for people that are in trouble and need to try to work out a way to keep their house. The other thing, and I posted something about this recently, but conventional loans, you are not going to get a better interest rate if your credit score is lower. You still get the best rate the higher your credit score. FHFA did make some changes to what are called the LLPAs, the loan level price adjustments, and what they cost based on credit score and loan to value. Some sectors, the LLPA improved, and in some sectors, the LLPA worsened. However, across the board, if you have a 680 credit score or a 700 credit score, your rate is going to be worse than if you have a 740 or now 780 credit score, which is the top tier. There will be times that it might be worth looking at doing 10% versus 20% down to possibly get a better rate. And with the recent changes to FHA and lowering the mortgage insurance, premiums, sometimes we are seeing FHA be a better option than a conventional loan. One other thing that I'll say to that, one shift that we're seeing for a long time, recently, jumbo rates have been significantly lower than conventional rates, and we're starting to see that gap narrow. And we're kind of getting to a point where they're about the same, to sometimes you're going to see jumbo rates be worse than a conventional rate. So it feels like we're getting back to more of a normal market there.
So I'll go back to, I mean, you know me, Max, like I always like to think of things at a high level. And so, at a high level, whenever financing changes, people figure it out. We're very fortunate in that we sell a basic human need. You need air, water, food, and somewhere to sleep. So we take care of that somewhere to sleep problem. I am not old enough to be able to tell stories about the early 80s, but I know people who are and who have told me stories. And whenever rates were at 13, 14%, people figured it out. There was a lot of seller held seconds, things like that. So what won't change is that people need a place to sleep. What won't change is that people will start moving back to Austin. If the financing environment changes considerably, I guarantee you that we will figure it out. I was looking for a link. There's a book. I even hesitate to call it a book because it's so short. Who Moved My Cheese? And you can find it on YouTube. And it's a 5-minute watch, guys. And I don't know how many times I've sent that link to different people, but you'll generally problem solve these type of things. Only because I can't not talk about it, but Henry also had a really impactful question there, which was certain countries depegging from the dollar. And what gets floated around in a lot of sky is falling conversations, which are great to have, by the way, is what if the US dollar loses its world reserve currency status? And one, I don't think that's a certainty. I think you have to ask yourself the question, which currency in the world is better than the US dollar? Chinese currency is certainly not, it's too manipulated. The euro is probably the closest, and it has more problems than we do. And then, I've talked with Dan about this, the Australian dollar or whatever, the Kiwi, whatever it is they use down there. The size is too small, so you can't use that. But if it were to happen, what happens to our currency? Well, we see massive inflation, yes. If we see massive inflation, what happens to the price of real estate? It goes way up. So it is something that I think would be very disruptive. I think people that own real estate come out winners in that scenario.
That's awesome. I just threw the link in the chat for that book in case any of you are interested in that. I'm going to go read it now because be honest, I haven't.
Here's I'll put the here's a link to the YouTube. It's 12. I was wrong. It's 12 minutes.
12 minutes, not 5.
12 minutes, man. Yeah.
I'm over it. You just
So that actually hit my radar again in 2021. No, sorry, in 2020, late 2020, early 2021, when the market took off and all of a sudden we had to coach buyers into offering 20, 30% over list. That was very much a move my cheese moment. Like, you used to be able to get people under contract relatively easily. Now you have to have these very hard conversations. So I think we played that in meetings at least twice. I know that.
Well, actually, I'm glad you made that statement because that's a perfect segue, because I really want to kind of move this conversation into strategy. Okay. We've talked a little bit about, where we've been, where we're going, what we're seeing, but let's talk about strategy, because at the end of the day, the reality is we're all here and we're all going to have to figure out how to make the best possible decisions to set ourselves up for success. So I'd love to hear from both of you. What are you doing from a business strategy perspective right now to set up your team, your business for success? Let's share some of those ideas and concepts with those that are on the call so that, we can kind of get into note-taking mode. You ready?
So, yeah, I'll start with that. We were talking earlier about back to basics, right? And a lot of people that weren't in the industry in 2008, 2009 might not really know what that means. The things that we have to focus on now, first and foremost, the deals are harder now. The buyers are harder, the deals are harder. As a loan officer, you have to perfect your craft, and it's easy to put through a borrower that's a salary W-2 borrower with no issues, but that's becoming less and less. So how much time are you putting in to each deal? A lot of guys would kind of shoved these deals to the side because you were just too busy to deal with them. And you may not have ever learned, or if you did know, you lost practice on working with the hard deals, putting the pieces of the puzzle together. So making sure that you understand, and every deal matters. We like to say we close loans. That's what we do. So it's like, don't just decline a loan, get another set of eyes on it. Escalate it. If you're at my company, you'll escalate it to me or underwriters or whoever to figure out a way to get things done. But spending the time on it is really big. Data integrity is also super, super huge. Your database, right? Like, is it accurate? Do you have the right birthdays and emails? And, loan officers marketing to real estate agents, do you have their home addresses versus their office addresses? Things like that, making sure that you have a clean database, and just systems in general, system efficiency, using this time to make sure you're continuing to deliver a 5-star experience on every single deal. At Loan People, we've built systems so that the loan officers can keep moving forward, right? You don't want to keep getting dragged backwards on during the process. We like to say, and some of this is from Eric's advice years ago, but we would love it if nobody used a CTC on deals with us, right? We try to keep the CTC, and obviously that wouldn't happen, but we try to keep it so that you don't need that CTC. You stay updated. The appraisal's been ordered. We're clear to close. All of these things, the appraisal, you get all of that information, and we've automated a lot of that to just stay in front and consistent on all of our deals. So
yeah, and I mean, to plug that for a sec, I actually never used TC on buyer deals, because if it went to Max's office, they stayed on top of it. So props to you for that. I always give Mr. Miyagi advice, I call it, and I guess I'm probably getting old enough now that reference might not resonate to a lot of people, but go watch Karate Kid, Mr. Miyagi. So number one, don't die, don't go out of business, right? That's the worst thing you could do, is go out of business. I tried to in 2008, got accepted to law school, was getting ready to go, blah, blah, blah. And I was like, oh my God, I'm not going to be able to pay my mortgage if I do this. So I stayed in the business, and then you cut expenses. You cut down whatever you can possibly cut, right? What's not working. Whenever the market contracts, you take a hard look at where there's waste. We've already done this, and we found a ton of waste in a lot of marketing and whatnot. Then you do what works. So in 2008, that was cold calling for me. I knew how to generate a lot of really crappy leads at the time. I didn't want to work crappy leads, but that's not what I knew how to do. And so I would sit at the kitchen table and make 100 phone calls, and I would get a hold of 1 or 2 people. That kept me from going out of business. Then once you're stabilized, and you're like, okay, I'm not going out of business, I'm doing what works, you look for the opportunity. Okay, lots of people are quiet quitting now. They are, because people generally quiet quit when things get hard. So what can I do to grow my market share? And that, I did not do that intentionally during the great financial crisis. I did it by accident. I did it because I hated making cold calls. And I figured out how to market in a way that would get people to call me. Now, as a brokerage, we're looking at the opportunity and going, okay, great. We've cut our expenses where we need to. How can we grow? How can we take more market share because other people are quiet quitting? And that's going to be a different answer for everyone. Whatever's working for you, do at least 80% of that, right? Maybe 90. Don't go out of business. However much you have to do. If it needs to be 150, do it 150%, not to go out of business. And then once you're stabilized, look at where you can gain market share, what the opportunity is.
Okay, listen, I want to stop and kind of put a pin in it right here, because there's some really good wisdom being shared. Both of you jumped in on 2 points that I want to dig in a little deeper to. Eric, you just said, figure out what was working for you and do 80%, 90% of that in your business. So out of curiosity, you said picking up the phone and making calls was something that worked for you, right? So if I'm listening right now and I'm challenging myself to figure out what works, and I'm newer in the business and I came from a different background where things were kind of easy, what worked for me might not be relevant right now. So if I'm not able to do what worked for me, what are some let's give some mentoring here. What are some things that people that don't know could do that might work well for them?
Max, do you want to start?
Yeah, I was going to say, I mean, I kind of touched on it earlier, but the number one thing is your database. And that does not necessarily mean just past customers, right? It is your whole SOI, your sphere of influence, your friends, your family, that kind of thing. Having a very well kept database is the most important in my mind. When I got into the mortgage business, I was 20 years old. I did not know what a mortgage was. I was told you could make some decent money doing this. I was selling cell phones at the Arbor Car Wash on Jollyville here in Austin. And the lady came through. She offered me, I sold her a couple of phones. I was really good at it. She offered me a job as a loan officer. That sounded great. I had a database. I kept a database of everyone that I had ever sold a phone to. I don't know why I did it. I just did it. And then when I got into the mortgage business, you know, I did everything I could. So I would go up to the KW office here where you weren't allowed in, and I would wait at the back door till someone walked out, and then I would walk in behind them and shove flyers in boxes. I would do things like that. But I also sent out mailers to my database of everyone that I had sold a phone to and said, hey, now I'm doing this. If you need a mortgage, or if anybody you know needs a mortgage, give me a call. And it worked. I closed my first deal in like 40 days. You know, so people know you, people you've done business with, even if it's not in this industry, that is your gold, that database.
One of our mutual friends dug up an old flyer from Max from I think 2008, and it had his AOL email address on it that he was sending out. Dana put it together, I'm sure. I think Dana was more embarrassed about it. It shouldn't have been embarrassed. It was great, but that was awesome. So Cody asked specifically, I'd like to know, and you know, man, I'll continue to be a little bit cryptic with it, but what we do, we have tons and tons of marketing sources, and we've got a pretty big marketing budget. So, you know, we were able to cut 50% of our print postcard farm without seeing any downside. Like, we looked at it and we were like, oh, let's pull out of the suburbs because now it's harder to sell those houses. So that probably is not somewhere we want to market. You know, our AdWords campaign has always been really massive. I mean, we spend, you know, 50 grand a month or so on it. And we hadn't looked at it because money was falling from the sky. So it was like, why should we go monkey with this? We really just need to close the deals that are coming in. We were able to cut that down by more than half, just looking at wasted spend. And so, you know, what's great about that is that whenever the market comes back, we're going to maintain those efficiencies and we'll profit more. But let me tell you this. So marketed leads are down considerably more than the market's down. I don't know why. Max and I have talked about it and we're guessing the dynamic why, but marketed leads are down by 50 to 60%. And I think the reason why is because more agents there's still the same number of agents trying to get the same number of deals that are worth a lot less money. So I think people don't have to go to the internet or go somewhere to find an agent anymore. So what works? If you have a lead source that works, you know, you dial that up to 11, no question about it. There's no reason not to, right? But what I know works isn't super fun and it's not super sexy. And that's just getting in front of clients, potential clients via open house. If you have a strong database, make sure that you have very, very systematic marketing to that SOI and pick up the phone, call them. It's free to do that. You know, I guarantee you that your clients are concerned about the property tax value of their property right now. You should probably reach out to them and offer to give them comps. We actually have probably a listing coming in. Some guy I've never talked to, he just saw we had some marketing. It was like, hey, we'll give you free comps for your house if you need to protest your properties. Offer value. You know, you prove value to your SOI, you prove value and give it away for free. And then what do you know? People end up hiring you because they want more of that value.
Yeah. And, you know, to your point about database here, because, you know, you're not wrong. You're absolutely right. But one of the things I was thinking about, you know, Max, what you described is, you know, you are somebody who clearly has strong tenacity. I mean, if you were waiting for somebody to exit a door so you could jump in and flyer, like you're every 100% commission salesperson's, you know, hiring dream. Like you have that tenacity. Some of the folks in here may or may not have that same bandwidth or ability to jump in that way. So I wanted to kind of share a couple ideas for, you know, those of you don't have to raise your hand and admit like, I would never do that. I don't have the, you know, the fear factor for that. But what are some ways that you can find how to strengthen and build up your SOI? So here's what I was thinking, you know, because I thought about the initial question coming in, you know, how many of you were around during that 2008 stretch? There's a lot of no's, which indicates different generations are in the room. Now, that being said, at any given time, all of us have had different email addresses throughout the course of our life, right? When you were in school, you had one address. And then as you moved into a different, maybe you created a different address for your friends. Maybe, I mean, most of us have had an average of about 5 email addresses in our life at minimum. How many of you have gone back through those email addresses and downloaded all the contacts from those? It's worth it. Now, does that mean every single person's going to be a potential opportunity? No, of course not. However, once you get rid of the spam out of there, there's people that are now possible referral sources, right? This can expand your SOI. Now, thinking about social networks, most of us are on multiple social networks. How many of us are pooling and really scraping our social networks to bring those people into our databases? Now, obviously, you don't have all the data points to have a full customer profile, but even if you have some, like for instance, I know even with our platform, Follow Up Boss, when you pull in someone's name, we do a quick scrape of Google and we pull in information. So a lot of times you're going to get data on people that you didn't otherwise have that information, and that can help complete that customer profile for you. And there's other ways for you to continue to do that. But I'm just thinking about those of you in the room that are sitting here thinking, great, I just don't have a robust, customer profile yet. I don't have a huge database. There are ways that you can do that, and scraping. And, I know we all just want to throw money and just have like this huge lead source jump up and be in our laps. And now everything's easy. But like both Eric and Max are saying, it's the conversations inside your sphere that are creating the best results. So you're going to have to dive in and figure out if your sphere is social, if your sphere is, maybe people you went to school with or worked with at your last job, find ways to bring those people into your CRM, strengthen your database.
No, I agree with all those points. It can be tough for younger, newer agents. I moved to Austin in 2002. I was having a lot of fun bartending and then got really sick of it really quickly and got into real estate in 2003. So what was coached to me at the time was work your SOI. Well, my SOI was a bunch of bartenders, right? Luckily, we could actually get them financed back then, but nobody wanted to buy a house. So what do? Well, you have to figure out a way. If your SOI is not fruitful, if you just moved to Austin, like a lot of people have, you don't know a ton of people yet, they probably all know agents, then you have to problem solve that. How do you, if you can't go to your SOI for some reason, because it's not big or whatnot, how do you get in front of more people? I mean, open houses work. They just do, providing industry events can work, anything that allows you to be elevated to the status of local expert, get there, be that local expert and collect the email address and make sure that you can continue marketing to that person in a very helpful way. Don't send crap newsletters to them. Send them stuff that's actually helpful. How can I help you, right? That's the first question you should ask anybody, and continue asking that in order to get customers.
The other thing is two things really. One, ask for the customer. Ask your folks. Ask your sphere. Do you know anybody that could use my help? Ask for it. But the really the bigger theme on all of this, and I still deal with it, I know Eric does too, it's getting comfortable being uncomfortable. Doing things like what we're doing now. Eric and I have never done this. I mean, I've talked to people before, and I've been on stage before, but never, we had 400 some odd people come on this, and talking on a Zoom is much different than talking to a room of 1,000 people, because you can see everybody. It's definitely uncomfortable. Or, even the reels that I post on social media, like I get a lot of good feedback, and thanks for those that do, but it's not comfortable. I feel like an idiot when I'm sitting there filming this stuff, and you put it out there, but you have to be comfortable being uncomfortable. And that's I guess one of my biggest pieces of advice, honestly.
I'm not a self-help guy. So, the book I just posted, don't take it as, oh, Eric's just going to start pitching self-help stuff. But there's a book called The Comfort Crisis that I read pretty recently that literally just talks about that, about how, we're all so conditioned to be comfortable all the time. And getting uncomfortable is highly valuable for a lot of things. I'm a weirdo. I love being uncomfortable. I don't know why, but if you get comfortable with being uncomfortable, great things can happen, because you don't have these boundaries and barriers set up that are not allowing you to do what needs to be done.
Well, I think the benefit of becoming like you said, comfortable with being uncomfortable is, I think most of us can, if we really take a hard look at our journeys across our life, whether it's personal or career, the times when you have been challenged to actually grow and do something that you didn't think you'd be capable of doing is when something happened that pushed you to your limit. And being uncomfortable allows you to be kind of pushed to your limit. Or how many of you, I don't know if you're like me, but as soon as somebody says I can't do something, or they make me think that I am not capable of something, oh, let me just tell you, that is when I'm going to just show you all sorts of things about me that you just did not know. Right. And so I think that leans into that being uncomfortable side of things. Is it fun to feel doubted? No. Is it fun to feel pressured under a circumstance you're not familiar with? Of course not. But if it can push us to become better, we were talking before we got on this call, and you were talking about how taking the time to increase your market share during this time, like you said, outwork the recession. You come out of this, the market will shift. It always, whether it goes one way or the other, it's always going to change. So if you put in this time and then you come out of it ahead, all of a sudden, all this effort you put in, this discomfort that you sat in, now elevated you to that next level, right? So I think that there's some seeds of hope in that discomfort and knowing that you're setting yourself up for future success. I want to make sure I'm staying on point here. So I do want to get to one last talking point before we kind of go into our wrap-up Q&A side of things. How are the two of you guiding your agents to actually maintain success during a downturn? I'd love to, any kind of golden takeaways that we can share here.
I think it's important.
Max?
Yeah, I think it's one thing that I'm preaching to everybody. We call it study hall, and it's every Thursday at 11, and it's not mandatory. Just loan officers get on and we just kind of talk about it. And, I talk about what's going on in the market and what I'm seeing, and then we kind of go into, what wins did you have? Where are your struggles? Are you having trouble on deals? And it's kind of a collaborative deal. First and foremost, staying positive through this time it's really, really important. And look, I'm guilty of it too. Mortgage companies lost an incredible amount of money Q4 of last year and into the beginning of this year. This is all a new experience for me. It's easy to be like, oh my gosh, I've got, we have 120 employees that I've got to worry about, and there's a lot of salaries to work. There's a lot of things, but you've got to stay positive. You can choose to be positive. You can choose your actions. Positive actions equal transactions. I preach that often. And being there as a leader to listen, right? Somebody, I can't see it now, but someone said, listen more than tell, ask more than tell. That's true, whether it's with loan people, employees, or real estate referral partners, or borrowers, or whomever it is. Ask the questions and listen. You can learn so much, and you can help people so much better if you just hear what's going on. So that's the big thing, and then, like I said earlier, making sure databases, systems, processes, knowledge, all of that stuff, and continuing to train. But keeping a positive attitude right now is one of the most important things you can do.
Yeah, I mean, you took the words right out of my mouth. I swear I'm going to get positive and productive tattooed somewhere. That's what we continually preach to everyone, is you have to be productive, and don't trick yourself. I won't be negative here, but agents a lot of times trick themselves into thinking they're working because they're doing what they like to do, but you have to focus on what's productive. So focus on the productive and stay positive. I would make cold calls in 2008, really didn't like it, but whenever I would get finished with it, I'm like, oh, wow, that was really productive. I have a new client, they're set up on searches, whatnot, and I don't have to do this again for a couple of days. So if you're doing things you don't like, just look at where the light at the end of the tunnel is. You're not going to do that forever, right? You're going to work through it. And remember, this is work, right? And stay positive. What Max said, I used to be, I'm such a cynic by nature that I used to think that positivity didn't matter, and it absolutely matters. If you're not positive while you're doing these things, you're going to be miserable, and you have to have fun in what you're doing. So yeah, positivity all day long.
Well, and if you're not, the other thing is too, that comes across. If you're desperate for a sale, if you're desperate in the loan officer world for a lock, customers are going to hear that, right? Your referral partners are going to hear that. I tell everybody, when you're on the phone, I don't care how bad your day is, talk with a smile. Always smile when you're talking to people on the phone. They can hear it. We all say fake it till you make it and all these other things, but just at least smile when you talk to people and you'll sound happy. And then you can hang up the phone and go back to being pissed off. But
or not. I mean, try to
or continue to be positive and change your attitude.
Yeah, I mean, you can gamify it for yourself, right? I mean, you can say, okay, look, going back to the cold call thing, because gosh, I mean, literally, I hate cold calling worse than probably anything in the world. But yeah, I would say, okay, great. Like as soon as I get 2 people that I've talked to that I can set up on searches, I'm done. That's my win. Let me see if I can do it faster than I did it yesterday. Well, you obviously have to be productive in order to win that game. And then it doesn't feel like it's such a slog. You're competing against yourself. Friendly competition. Get a mentor. I would say, gosh, I can go off on huge tangents now, but like, I have mentors. Max and I call each other our friend tours. I'm going to make him a t-shirt, I think. But go find people that you look up to that you can trust and really listen to them. Make sure that what they tell you isn't, something they're guessing on. Make sure that they know what they're talking about. It'll help a lot. Keep a friend group that are also positive and productive. Whenever you get down, that friend group will bring you up. I'm on a couple of different text threads that, generally speaking, when I see one come in, I'm really excited because I know it's going to lift me up. And all these things are really important to help you get through a hard time.
I love that. It's interesting because what you said about who you surround yourself with makes a difference. One of the challenges that I have given myself over the last, probably I'd say the last 5 years, very consistently, is hire myself a mentor every year, but I want somebody that's outside of my lane and that somebody that knows a lot more than I do in a certain area, right? Something about when you align yourself with somebody that has just a ton of knowledge in a place where maybe you feel a little intimidated or a little weak. And even if you can't speak to, at a high level, the conversations that they're having, what happens is you're strengthening a part of your mind, you're strengthening a part of your processing that allows you to become sharper in every other corner of your mind. So that's been a really, really fun little strategy to lean into. But also just keeping in mind that how you're going to get in front of people, like think about how many of you get calls or get, mail or get emails or get texts or all the things, right? And how many of you will behave in a way where you're just blowing people off on in certain ways? Take a look at that. Look at the things that you're blowing off and then say to yourself, am I providing something that feels at all similar to this? Because if I am, odds are that's the response I'm getting. Right? Yeah. So oftentimes I think if we look at ourselves, like we are all getting hit over the head as well, making sure that we are doing opposite of what most people are doing. People are doing what feels easy. I think you said that, Eric. We trick ourselves into thinking we're productive if we're doing this stuff that's easy to us, that we can do quickly. But a lot of times those actions are the actions that are absolutely providing no real results. And
yeah. A lot of times it's a box you're checking, oh, now that's done. This is going to work, but you don't really know. If you're not tracking it, you have no idea. I'll say, like, in terms of super actionable advice, how many people stop and get a free sample at the grocery store? How much more likely are you to buy that whenever you've just tried it at the grocery store? Sometimes I feel guilty and that's why I buy it or whatnot, but there's not a snowball's chance in heck that I would buy it otherwise. And you guys have the opportunity to offer samples at the grocery store whenever you do open houses or whenever you go to other events, and you don't like shove it down people's throat or whatnot, but it allows you to show your value, collect information, and that's going to be, I guarantee you that that's going to be productive. Hopefully it's so productive that you're trying to figure out how you can find the time to do more of it,
Yeah, it's the same on the loan officer side too, giving presentations, teaching realtors about the different products and programs, and the 2-1 buy down became really big again, and explaining that to people, or what is a DSCR? There's a lot of stuff, right? And if you continue to show worth and bring value by bringing knowledge, that will help. I want to say this, Eric and I have talked about this a lot over the years. a couple of things that I told Eric a long time ago, and honestly, I forgot that I said it, and he recently reminded me of it. But I told him at one point, I'll give anybody 30 minutes. I'll give anybody 30 minutes, even if you're not working with me. You're working with another loan officer. That's fine. I'll give you 30 minutes, and if you want more than that, then we'll talk about it. But I never focused on the money, right? I always focused on helping people. How can I be valuable? How can I help people? How can I be a servant leader to my team? I never focused on the money, and the money just came. And I think a lot of times people are so focused on, I have to make this much money. Obviously, look, we have to pay our bills and that, but I have to make X. I have to compare myself to so-and-so. I have to do this. I have to do that. Really what you have to do is help people. And if you focus on helping people and doing the right thing, the money will come. Don't focus on the money. I see far too many people make that mistake.
Yeah, or try to disqualify people, right? I mean, we have a pretty strong process on what we do as soon as we talk to anybody who's considering moving to Austin for any reason. You talk to them, all the red flags in the world, right? We're still going to follow that process. And our agents will tell us that they actually get referrals from people that never bought from them because they provided such value. So I've been kicking around like an idea of don't sell, prove value. Whenever you prove value to people, you just don't have to sell. And that's where you want to be. And even if you talk to somebody and man, they just started a company and you know all the reasons they've got bad credit, all the reasons in the world why this person's not buying a house this year. But if they're interested in real estate, show them your professionalism, set them up on searches, whatnot, however you can help them. And I mean, unless you've got business coming out of your ears right now, that's the most productive thing you could do at that minute, right? You showed that person value. And it's not a pie in the sky that person could send you business, and that person might not. But if you make a habit of doing that, you'll have all these people out there that consider you the local expert that'll start sending you business, and that's where you want to be.
Yep.
I love that, Eric. And if I could actually just like a really quick tactical tip, because at this point, all of us have social media, and if we don't, we really should, be in there leaning into it. But here's a great way that you can lean in and provide value without being pushy. We're all connected to whoever it is we're connected to, right? We all have, some of us might have some overlap with who we know, but the odds are we have our own little spheres, our little social spheres. If you were to time block and take the time to go through your connections thread. So in other words, whether that's on Facebook or on Instagram or on YouTube, wherever it is, and you're reading through what they're posting and you dig through the comments and you start engaging in like, that's a good point. Oh, have you considered this? Like if you were to go in and have conversations from an engagement standpoint, you will start to accelerate yourself as a thought leader without anybody seeing you going in and trying to be super salesy. You're just engaging in conversation. To me, I would time block every day time to engage with my sphere. If you can do that, that is going to help get you some serious knowledge points and building relationships along the way.
It'll help you with your overall confidence and competency as well. And if you don't feel confident in talking, publicly like that, go take some classes. This is something that you can absolutely improve yourself. You have time now. Last year, you didn't have time. 2021, you certainly didn't have time because there was too much business to close, right? But time block, as Stacy said, that's one of my favorite concepts in the world, and get really, really good about being at being an expert.
Yeah. I like that too. Get comfortable being uncomfortable. There's a book, Talk Like Ted. Even if you're not going to become a stage speaker or a public speaker, the reality is that anybody who is pitching to a customer and has to be in competition against someone else, every single one of you is actually like a stage speaker, because you have to present yourself at a higher level than the last person that had a conversation. Talk Like Ted is a great book, and it's an easy read with some great tips on how to just level up your competencies when you're in front of somebody, whether that's on Zoom, whether that's in person, whatever that might be when you're pitching someone. We've given you a few books to look at here. Why not add some more? But we've kind of hit all of the talking points that we wanted to kind of at a high level lean into. What I'd like to do now is let's just really, are you cool with this, Eric and Max? Can we kind of open up into like a really conversation, like with the time we have left here, anyone that has just questions that wants to, we have a hand raising button down here. If you see down on the bottom of the screen, there's that little hand. If you've got a question, and you want to jump in and ask it, let's continue the conversation with just some Q&A here. Who feels brave and wants to raise their hand, or if you want, you can in the chat. Oh, Nicole, look at you. I'm going to open up the queue here. Nicole, she's got a question.
Hi. And thanks for putting this together today, Eric. I appreciate it a ton. And I wanted to ask generally if people want to share in the chat, or Eric, from your brokerage perspective, what has been the #1 value add at your open houses in this current season of the market?
Yeah, I'd love any of our agents that want to share that in chat. That would be super awesome. One, and we're late to the game with Ninja, by the way. I didn't read the book until early last year. A big win we had last year was it was the Ninja annual reviews, and I'd highly recommend that right now. If you have extra time, go back to your sphere. I mean, Nikki, I know you've sold a ton of houses over the years, and you could go back to your closed clients and provide real estate reviews for them. The very first, whenever we introduced this to the brokerage, Casey Gilliam went on the very first real estate review appointment, and she got a referral on that very first real estate review that she put together. We're like, oh wow, I think we probably have something. Eric Ingberg told me the other day that it's turned into his #1 source of business. So it's proven. It is uncomfortable, I'll tell you that, but it's highly effective.
Eric, for those that don't really know what that is, can you kind of give like a super quick?
Yeah, so I'll share a link to it. We have a process that we kind of put together, but the outline is from Ninja Selling, which Ninja Selling, their #1 concept is you continue to provide value to people in any way that you can. So the annual review, what it does is you just run through a checklist. You show them roughly what their property value is in case they need to refinance, or in case they need to get MI dropped off, things like that, or protest the property taxes. You also run through a checklist of systems. So, how old your AC, how old your water heater, things like that, help them get in front of potential issues. And it's a big, big value add. And it's things that we all think of, second nature. I know for a fact that there's an AC that I'm gonna have to replace on my house because I know how old it is. Most people don't think through that. I know very intuitively if I need to protest property taxes or not, just looking at it, but most people don't think about that. So you as the expert can run through this relatively quickly. And then the uncomfortable part is you don't send it to them by email, you do it in person. And that's sort of the magic that shows that you care whenever you do that. I'm probably butchering the process or missing pieces of it, but that's at a high level what it is.
I love that. And of course, we put the link in there so you can dive in and go more. But thank you for kind of glazing over. Amanda Stewart, she's put her hand up. Amanda, you want to jump in with your question?
I can see Amanda through my window. She did not mean to raise her hand.
Oh, Amanda, did you want to look over your hand for you? That's okay. That's so funny. Does anybody else want to jump in with a question? That's always my favorite, my favorite part of, like, whether you're in a classroom setting or in a webinar setting, like that, everyone's like, don't look at me, don't look at me, don't look at me. Let's see, Eric, you just put a link in there. For the process for the real estate review. Thank you.
And it looks like Stacy linked to, Stacy Spick's linked to Ninja Selling, which is also great. Highly recommend reading the book. I always tell people, nobody gets everything perfectly. And the one thing Ninja gets wrong is how they view tech and how they view email. What they'll always reference is that email only has a 17% open rate, and that's just not the case. If you're sending good newsletters, we're at like 43%, and market updates are at 60. So listen to everything I had to say, but don't use a spreadsheet for CRM, please, and know that emails are valuable. So.
Yeah, for sure. Okay, we do have some folks that are braving up and coming up to this stuff. Let's see here. Aubrey Shaw, did you want to jump in with your question?
Yeah, hi, Max.
Hey.
Hi, Eric. I was just wondering, who are y'all listening to for your market updates? Just who are you following? Where are you grabbing all that from?
So I'll take that. Obviously, Barry Habib's the big one, so I do listen to him. Logan Motoshami with Housing Wire is really awesome. So I listened to his podcast. Housing Wire does a podcast with him on there, and follow him on social media. Those are two of the big guys. There's one in the inner circle of the lending world. His name's Dan Rawich. He's an old bond trader. He's been in the mortgage business forever. I listen to a lot of what he has to say as well.
Yeah. I follow the inverse Jim Cramer first and foremost. But no, I listen to a lot of podcasts, actually, Stacy, Dan Corkle and I talk about stuff all the time, and he's probably one of the more highly informed, highly educated people on the broader economic topics. Other than that, Mark Sprague, anytime that guy has a presentation that I can weasel my way into, I will go listen to Mark. He's a very, very, very local, very, very, very expert. And then Angelus Angelou, he was sort of like my security blanket back in 2008, because he was speaking a whole lot during the great financial crisis, and he was right about everything. He doesn't speak as much anymore. I think he's gotten a little further in his career and just isn't engaging as much. But if you ever see an event with Angelus, I'm not sure how you pronounce it, Angelou, just a phenomenal guy. One of the main reasons why Austin's grown like it's grown. He was behind a lot of the economic growth planning that the city put into place years ago. So
awesome. Heather Powell, I know you were waiting very patiently. Did you still want to jump in with your question, Heather?
No, we just answered it.
Oh, look at that. Sometimes it just happens when you just
Eric, you're a genius. You don't even know it.
You can answer questions without even knowing what we're saying.
My dad always told me it was way better to be lucky than good at anything, and I've lived by that my whole life. So
yes, as a Jill of all trades and master of none, I that resonates. Stacy, let's see here. She says, I agree on Mark Sprague. Also Eldon Rudd and Dave Tandy, all super good things for Austin specific. Also,
I agree with Stacy on that.
Yeah. Those of you that this is being recorded, and Google does record the chat as well. So you will be able to kind of thread back through the chat, and you'll see there's been some great nuggets of wisdom dropped in there and people sharing different links. So you'll have access to all of that as well. We are starting to kind of cut around the last 15 minutes before folks, probably need to jump out. If there's any other additional questions, this is your last call.
Nancy had a question on what company are you using to retrieve reviews online? I can say for us, we do it all internally. We are very consistent about asking for reviews, sending out links to all the different various places where they can be posted. But we're very, very meticulous and methodical about doing that ourselves.
Yeah, it's an internal system. We have an email that fires from the agent the day after closing based on some criteria that they've been put into the system. It's consistency, that's the key. And for yourself, just don't forget to ask. That's really it. Whenever you get to sort of scale, you have to figure out a way to make sure everybody doesn't forget, and that becomes a little bit harder, and we had to build it. So
yeah, we did the same thing. But that's one of the reasons we blew up the way we did. We were one of the first to figure out. Let me clarify that. My wife Dana, our CMO and genius secret sauce that she is, figured out online reviews well before anybody else. So we got a good jump start there.
Awesome. I did see we had a question jump in from Scott. He can't get his mic to turn on, but he wanted to know, what about the upcoming commercial real estate bottom out, kind of predicted by Elon Musk and others? How do we think that's going to impact the residential side of the real estate market?
They're very separate. I mean, you will have people that have invested in that, they won't be buying houses. But I don't know that, if a commercial market, it's same as the commercial market in San Francisco is absolute garbage right now. And, if you look at the residential numbers over there, it's trending with the rest of the United States generally. Same with Austin. I don't know that Austin bottoms out. I think that there are still, once the economy is back to normal, Austin continues to grow. These companies want their employers coming in 3 days a week at least. And so, I don't know that Austin necessarily participates in that, but I'm not sure that it matters a whole lot to the residential market.
That's a good call. It looks like Sharmila. Sharmila, you have a question. Do you want to jump in? I think you, let's see, I'm not sure if you're muted. We can't hear you, Sharmila. I'm not sure, maybe her mic is not connecting. If you want to drop your question in the chat, Sharmila, we'll be sure to get to that. She said something's wrong with her mic right now. That's okay. Feel free to put that in the chat. We definitely want to get your questions answered. Is there anyone else, while I still have the queue open here, anyone else that wants to jump in with a mic question? Okay. I'm going to just go ahead and check out the chat here one more time just to see if we've got any questions that did not get touched on. I want to make sure everyone, that's one of my things. I want to make sure everyone's heard and has a chance to speak. That's important to me. Let's see here. Jeremy shared that for open houses that their agents have been saying that door hangers are working really well to drive traffic to their open houses. Thanks for that share, Jeremy. How many of you are seeing that happen for you as well? Let's see here. I love the concept that you said where you have to, how can I help someone instead of how do I need to make money? You know, it's so true. You can smell desperation. I mean, even as I'm scrolling through my social feed, I can't even begin to tell you how many times, and maybe I shouldn't admit this, but you know how when you're going through your social feed, you can tap on the three little dots to the right and then mute someone. I have been on a muting frenzy because I am so sick of blowhards. How many of you are sick of the blowhards where everybody's just like, I know everything? It's just like, no, you don't. You're just reiterating what you just saw somebody else post on a different TikTok, and you're trying to act like you know something, but you don't. It drives me nuts, right?
One of the most educated things you can ever say is, I don't know. It's like to say, this is what I think will probably happen, but it's not set in stone at all.
Yeah.
And so Sharmila just, she posted her question, said, what's the thing to tell buyers who are sitting on the fence? And I would say, do you need a house right now? Right? If you do, it's probably a good time to buy. Rates are high, but you can refinance. If you don't need one, it's probably not the time for you to buy. If you're nervous and you don't have to buy a house right now, then probably wait. You know, everything is unique. And is now, in hindsight, do I think that 2023 is a buying opportunity? Absolutely. Can I coach somebody or convince somebody to buy right now? Probably not. And if I could, I wouldn't do it because I want people to buy whenever they're comfortable doing so. Same with sellers. Should I sell this year? Or price is going to be better next year? Prices will probably be market will probably be a little bit better next year. Do you need to sell right now? Okay, great. Let's talk about that and what that means. Let's talk about your options. Can you hold on to it for another year? Okay, we can try to get your price this year, and if we can't get it, we can relist it next year. So it's all about just listening and understanding what they need, what they want, and not applying any pressure whatsoever. Pressure doesn't help anybody.
I see. And actually, Eric, just taking myself out of moderator mode for a second and just thinking about if I was in the market or if I was considering, I love the way that you leaned in with like, this is about you. I like, honestly, like I'm not going to push one way or the other because this is about you. Made me on it. Like my human instinct side of it was like, I want to work with somebody that's going to make me feel absolutely not pressured. And so if you can ask yourself, how do I lean in? How do I begin conversations with people? Am I putting that hard pressure on there because maybe I was coached that way, or maybe, maybe that's just, my personality is just to kind of be intense. But ask yourself, does that work when someone hits you over the head that way?
So what's behind that question a lot too about what can I do to get buyers off the fence is that, you look at it and go, this is a good opportunity for them. Why don't they see the same thing? They don't see the same thing for any number of reasons, and you can give them all the information in the world, all the data, and say, you got to make up your own mind based on this stuff, right? But under no circumstance am I telling you have to buy right now. And then if you look at that, okay, that changes your pipeline. Now these guys are not going to buy in 2023. Okay, great. Maintain the relationship, sell them in 2024. Now your time just freed up because you don't have to go show them houses. Figure out what you can do that is productive to help you get more people in your pipeline that will hopefully close in 2023.
We had another really good question jump into the chat here, and this one applies to many cities across the US, actually. There's a lot of areas in Austin becoming inundated with people experiencing homelessness. Any tips for selling a house when buyers can see evidence of that on your street and in your neighborhood? That's such a great question. Any ideas around that?
I'm sorry to jump in again. It's a real estate question. So first of all, like, if you guys are not aware of Community First Village, please check it out, like in person. Don't just look at it online. Drive over there. It's amazing. That's what got me aware of it. Was Yusuf Johnson, who's a really amazing person. We were on a bike ride, and he was like, "Hey, we should go ride through this area," and I did. And it was amazing. And they're doing a really, really great job of helping homeless people get off of the streets. But obviously, they're not going to get everybody off the streets. Your neighborhood, that is probably not going to change. So if there are homeless people in the neighborhood, one, just you have to acknowledge it, and you'll have to price that in. So if you continue getting feedback that, hey, it looks like there's a homeless camp nearby, whatnot, that's probably not going to change, guys. And so you're going to have to price it accordingly.
Yeah, I've seen that in many markets. I actually have a good industry colleague who bought in a very prestigious neighborhood in the Pacific Northwest. And over the years, the homelessness increased at such a great rate that this once highly prestigious area is now home to all homeless, those experiencing homelessness. And so they lost value 100% on what they were doing. So it is interesting to see how you weather those storms. I wonder if there's going to be people that get creative and find ways to increase the neighborhood value through community value services, like whether those communities are leaning in together to become part of a solution. And then you have people that are attracted to an area because they have a heart for helping. Like I'm interested to see how, holistically this can change over time, but it is what it is in the time being, right?
Yeah, I mean, we're all, Austin's a growing city. Samina just said, sadly, get used to it. Yeah, I mean, and Stacy, to give you kind of a history on it, we've had sort of some ups and downs with city council, and it's something that wasn't as much of an issue, but it's a broader societal issue. And gosh, I mean, I'm incredibly sympathetic to it, and I hope some of the really crazy smart people that live in Austin can work with city council. I hope the city council can look at things in a way that maybe we can find some solutions to it. Sorry to get off topic there, but.
Well, maybe that's another topic and maybe another webinar for another day where we can get people together to ideate around some solutions. It might be a completely different conversation. Well, listen, I know we're just about at the closing point of this conversation. I wanted to say, first of all, thank you, Eric and Max, for taking the time to share your perspectives. I can say I sit on lots of webinars and I moderate lots of different conversations, and I'd say we had some pretty strong sticking power through this entire conversation, which really says a lot. It says a lot to the respect that people have for both of you, also to the conversation that we're having, the topic, right? So thank you for leading by example and, showing up very authentically and being willing to, there's no sugarcoating. We're not pretending like everything's going to be sugar-coated easy, but there are strategies. And we really appreciate that. So thank you. And those of you that jumped in here and were brave enough to raise your hand and jump into the chat, like I want to give you equal props, because I also understand when we're in a room of our peers, sometimes it's really intimidating to ask a question because you never want to come across feeling like I don't know something, or like having someone else say, wow, you didn't know that? So each one of you that actually raises your hand and jumps in, I just want to thank you, because your vulnerability helps others to learn. And so I appreciate question askers. And if you're silent and you weren't ready, it's okay. You're in receiving mode, and I appreciate you for receiving. But anyway, any last thoughts, gentlemen, before we sign off today?
I just thank you all for, Eric, thanks for putting this together, and Stacy, thanks for moderating, and thanks to everybody that joined, and thanks to my cousin Ben for his comments on my beard. No, I appreciate being a part of this. I appreciate all the support y'all have given me and my team and my company over the years, and we'll continue to do everything we can to give back to you as well. So thank you all.
Stacy, first of all, I mean, thank you so much for doing this. I think Max and I would have muscled through it and it would have been okay, but this is super duper top notch and elevated because you guided us through it. I will say this, I am still friends with the agents who muscled through the 2008 great financial crisis. I know them all. And, you know, you guys will experience the same thing. Keep your chin up, work your way through it. You're going to make some good friends. And what's awesome is 5 or 6 years from now, whenever the market's on fire again, they're going to recognize you whenever you're bringing an offer, or they bring an offer to you. And that's one of those silver linings to any cloudy day. So I look forward to that. I look forward to making some more really great friends through this.
Yeah, this too shall pass.
That's right. That's right. Awesome. Well, thank you all again for joining us today. We will, like I said, this is recorded, so those links will be shared out to you. I don't know the timeline as far as how many minutes, hours, days, but you will get it, I promise. Someone asked if they could share that with their team. Yes, I mean, this is all about sharing. This is all about leading with value. We want to be able to guide one another through our experiences. So absolutely. And if you want to continue the conversation and you think of later, you're like an hour goes by, you're like, oh, I should have asked that question. Please feel free to jump in and connect with any of us on social and ask questions, whether you throw that in a DM, whether you throw that in a comment, or if you want to email, however it is you like to engage. We are people that can be connected with, whether you were in this group, whether it's on the panel, please feel free to connect. Eric, we can add that in the follow up with the links. We can provide links where people can get a hold of everybody and continue the conversation, right?
Yeah, I'd love your advice on that. Yeah, let's go ahead and get that set up. You got to remember, I'm a noob at this, so
yeah.
Yeah.
So
I'm just along for the ride.
Yeah, well, I'll be honest. So inside the community I run with Follow Up Boss, I told Eric earlier this year, I'm like, listen, you're so smart, and I really want to see you elevated more. I want to hear your voice more. So I've been kind of prodding this guy to share his genius more and more. Am I right? Am I right? Am I right? Like, he needs to share his genius more, right?
It's all luck, Stacey. It's all luck.
Yeah. Humility. Anyway, we will make sure everybody gets it. The links, the connections, and excited to do this again sometime soon.
Thank you so much.
Yeah. Thank you.
Okay. Talk soon, everybody.
All right.
Bye.
Thanks, y'all.